Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And as I'm sure you can tell, we are not in our usual location for a period of time, but we wanted to get an update out nonetheless. And we haven't made an update over the past 2 days, which has led many of you to sort of ask where I am, which is nice to see. But occasionally, if we're traveling for work or business, we like to take a day or two off just to really focus on the tasks that we have at hand. But we are back, hopefully back today with a bang. And the first thing for me to do is to wish you all a smashing Saturday. This daily market update is going to be a rather heavy one in regards to the sort of macroeconomic environment and how I think that's going to allow altcoins to flourish. In fact, my wager is that in an environment where risk is doing well generally, the altcoin market is going to be the best performing asset class that there is, period. We know there's a lot of fundamental reasons to expect that. We are going to see institutional money be allowed to enter the altcoin market, first of all, with an Ethereum spot ETF, which is coming likely next month, and then with a broader basket of altcoin ETFs and actually basket ETFs themselves in regards to indexes and such. We've looked at Bitwise's top 10 index fund. We're bullish on that chart. We're bullish on Grayscale's crypto funds, blah-de-blah-de-blah. We've looked at so much in regards to why we have a bullish stance on the markets and why we are long, probably in my case, irresponsibly long, the altcoin market. But we'll see if that is the right decision or not. Time will tell. So this is going to be quite a macroeconomically focused one. We will fly by the Bitcoin chart, the Total 2 chart. I want to start things off with a little bit of interesting news in regards to the CEO of Dell and how he's now kind of really backing Bitcoin. But then we're going to be talking about the Federal Reserve, how they're going to lower interest rates, why they need to lower interest rates, what this means. Is a pivot bullish or bearish for the markets? Because I always get this comment that a Fed pivot is actually a very negative thing, and it has previously been. But if we look at the past 5 times the Fed have cut rates, actually it's only 2 of them that have led to a crash because the Fed's pivoted, but as the Fed's pivoting, there's been a crash that surrounds it, 2008, obviously 2000. And the past sort of 5 times, there's only those 2 times that have actually a pivot's been negative for the markets. The others have been actually quite bullish. And it always annoys me when I see these kind of blanket statements that our pivot is bearish for the markets. Well, it can be under a certain set of circumstances and context. And you shouldn't just regurgitate what some macro LARP has said on Twitter, who is probably positioned bearish for the market, has a bias in things. You should go and look at the data, which we're going to do in this video. We'll also be bringing up Stan Druckenmiller. He's kind of a green light for me in regards to the direction that markets and macro is going. And I kind of look at the IWM, which he pivoted into out of NVIDIA, as a kind of like altcoin barometer. So we have a lot to get into. We'll also be talking about global liquidity. Let's start the video off, and I hope you guys have missed me as much as I've missed you. This is from the Bitcoin Therapist. I won't make a joke there. So founder and CEO of Dell, Michael Dell, is sitting on $6 billion in cash, is what Dell's sitting on. Now he's posting about Bitcoin. Are we going to see another billionaire pull out the MicroStrategy playbook? Well, I think so. And actually, we did a video when we saw Elon Musk buy, and we know he then subsequently sold Bitcoin with Tesla, or through Tesla. I said, you're going to see a wave of this because a lot of people right now have their money sat in cash, and cash is trash. It's one of the only things I think Robert Kiyosaki really ever got right in understanding, although I'm a fan of Robert Kiyosaki's. Cash is trash. Why are these big companies going to hold cash solely when they have an alternative to do so? And that's the beauty of Bitcoin. It gives people an alternative. When I say the yen is a short Nikkei, or the Nikkei is a short yen trade, that means the Japanese stock market is a short the currency trade. The SPY is the same. Bitcoin is probably one of the best examples of a short currency, or betting on the failure of the fiat currency trade. And I think you're going to see a lot of people actually moving. Big companies like Dell, the founder was tweeting quite heavily about them, actually moving over to holding some of those reserves in Bitcoin. We're just waiting on Warren Buffett. But of course, I think there's going to be a lot of people that will be jumping out of cash as we start to see interest rates fall, which I do believe is coming, which is going to bring us perfectly onto the macro. So, wow, they did it again. This is from Switzerland. So Switzerland's central bank are cutting rates. This time they cut by 1.5. We've seen Europe do the same. The UK hasn't followed yet, but we had really good inflationary data in regards to 2% inflation, which is where it needs to be. So they will be cutting rates, which is, I remember that argument I had with a mortgage broker who was trying to get everyone to fix for years at this rate, having no context. And you think they'd need some sort of context in regards to rates are at and potentially where they may or may not be going. But the Fed are going to cut interest rates. And I do believe that's going to be a flourishing environment for markets generally. I think it aligns with global liquidity cycles, which has made a resurgence on Twitter once again. But we've been highlighting this for a long time. It aligns with PMI cycles. It aligns with the Bitcoin 4-year cycle theory. It aligns with where we think things are going. And altcoins are still yet to... Some altcoins, I mean, we have some altcoins in our portfolio that are hundreds of percent up. One of them at one point was 600% up. If you want to unlock my portfolio, do become a Patreon. But generally, altcoins are really yet to see their moment, have their moment. And again, my bet is that the altcoin market is going to be the best performing asset class, period. But we will see. So central banks are lowering interest rates. The Fed will follow. This is from Fed's Goolsby. We don't need annual inflation to hit the 2% mark before rate cuts. You're in two camps, bullish or bearish camp. The bullish camp is the one I'm in, of course, and have been in since January 2023. It's all public information, literally the perfect bottom for crypto generally, which is when not only I, but I know a lot of my Patreons at the same time got back into the market. We're sort of waiting for a lot of things to happen, but they are happening. We're getting further confirmation. The Fed are going to bring down inflation. The bullish camp, which is the one I'm in, is that yields are coming down, which means rates are coming down, which means the dollar's coming down, which means risk is going to do well. I don't want to go too much into the dollar. We've done a lot of work on that previously. Or you're in the bearish camp, which means that rates are going up. Yields are going to go up first, of course, on the first and foremost, which is going to drive rates, which is ultimately going to drive the dollar up, which is going to crush risk because everyone would have got, or a lot of people would have got a lot of things wrong. I think Stan Druckenmiller taking that bet on a small basket, the IWM, which we'll come to in just a second, is a good barometer that he doesn't think that's going to take place. You know, the Russell 2000 is his largest position, and it's quite a significant position. What else do I have for you? So in regards to rates coming down, the main reason why they will cut rates regardless of where inflation is due to the annual interest rate expenditure. And this is growing at a rapid rate. It's not that long ago. This was 1.6. I think it was a month or so ago. It's now 1.7. If they keep rates where they are, they need to cut rates. If we look at interest rate payments in the United States, it's larger than the defense budget. Something is seriously wrong here, and it needs to be addressed. We also have a hell of a lot of stress in regards to banks because those yields are high, those bonds are down, everyone's stuffed to the hills with bonds, so we need to see bonds coming back up. And ultimately, I think that's going to happen. And I always get this question, well, a pivot's bearish for the markets. Well, is it? It has previously been. But if you look at, and we'll do this, so we've got the Fed funds rate in green, and we've got the markets, or the S&P, which is, I think, a good barometer of the markets, in the Japanese candlesticks. And you know what? I'm actually going to put this on a monthly chart just to make this a lot simpler. And we'll just put it roughly. When they lower rates, so a pivot in the context of 2019, actually the market went on and went significantly higher. I think we're in a very similar situation to 2000. You know, if you can see where you were at all-time highs for the SPY, then they cut rates and the markets ran. But when they really sharply cut them, of course, that was on the back end of the March 2020. But similar thing, cutting rates, you know, I do think we're going to go higher generally the market. So a pivot in that instance wasn't bearish for the markets. A pivot in this instance, okay, the market, when they pivoted, went slightly higher but then crashed. So we'll say generally, out of the two times we've looked, it was bearish for the markets. It was 1-1. Here, it was definitely bearish for the markets back in the dot-com crash. However, here, it was actually extremely bullish for the markets. Also here, when they lowered rates again, this time it wasn't. So we can say the pivot after a hiking cycle, we're not really going to count that, is here. Let's take a look at the context of here. This actually wasn't such a bad thing for the markets at all. And certainly when they cut rates again over here, this was the bottom for the markets. So is a pivot, and if we look at this one, up to interest rates, brought them back down. You know, if we look at a pivot and is it a bearish thing for the markets? Well, it has been, but actually there's more times than not in the past 20 or something years, it's actually not been as bearish as people make it out to be and seeing the markets going high. And I think we're at that similar inflection point today. I think it's why you see the likes of Stan Druckenmiller taking a position in the IWM, which chart looks like this, which looks like many altcoins. This is now a broken out chart that we've been watching. We've got many sort of phase 2 stocks at the moment. We've got some really good Bitcoin and sort of crypto related stocks that we think are going to do for a stock, well over 10x this cycle. Some of them 20x. If you want to get on board with those, do consider becoming a Patreon. And of course, you guys know my views generally on the markets. It also aligns with global liquidity, PMI cycles, which we had a really good result for yesterday. Sorry, not yesterday, because it was a Friday. This follows the Bitcoin 4-year cycle theory. Everything aligns, and then of course that aligns with technically what we're looking at generally for markets. I still believe this is going to form that right shoulder and get us to $3.8 trillion. A lot of people are skeptical. A lot of people are non-believers. Those of you who have been following me for long enough will know we get a lot of these things right. And we ultimately think that's going to be the case here. And we've continued to stress that this is just a pullback for Bitcoin, not the start of something more broadly. Because when you look at the chart, that more broad bear market entering still isn't there for me. This is just a pullback in what is a broader uptrend, in my opinion. But we could always be wrong on that. But we think that's supported with where rates are going, what the broader repercussions for the markets are on the back end of all that. And that ultimately gives us, I think, a rather bullish picture generally. So I wanted to cover that because I thought it was interesting news that Switzerland also lowered rates. It kind of made me think more broadly about where rates are at and where we're going. Hang in there, guys. The altcoin market is still yet to see... It's kind of mania. It's time to shine, if you will, and we've still got to get Bitcoin dominance to roll, which will roll. There's a great fundamental reason for why. We're going to get the Ethereum ETF probably next month. There's a great fundamental reason for why you should be bullish on the altcoin market, and I know the sentiment is awful whenever we go for a pullback. Certainly with altcoins because of how high beta they are, how volatile they are. But you need to hang in there and you need to understand the big picture, which is what we try and impress on people on this channel, and understand that the big picture has been soundly thought out. We're not just looking at one thing and saying, okay, we're going all in on that. We're looking at the macro environment. We're looking at rates. We're looking at what that means for the dollar, what that then subsequently means for risk, where crypto finds itself against risk. And you get this beautiful picture. And my bet is, and remember this, that the altcoin market is going to be the best performing asset class in what is going to be a generally bullish environment for markets across the board based on sort of monetary policy and where it's going. They are going to continue to, and it's the ultimate game really. If you look at the top 1% of earners and the money supply, they go perfectly hand in hand. But I just wanted to make a short and sweet update, kind of updating people on everything or some thoughts that I have that I found really interesting. I am currently away. I will be back potentially Monday. I might do another daily market update tomorrow. We'll see. I hope you guys missed me as much as I missed you. On that note, I am going to love and leave you. If you've enjoyed this content, a like is always greatly appreciated. So is a comment, guys. And I'll see you all in tomorrow's video. Let me know your thoughts on this. What do you think about interest rates? What do you think about the macro environment? What do you think about a lot of the things we've spoken about in this video? Do you agree? Do you disagree? I want to know your thoughts and comments in the comment section. On that note, I'm going to love and leave you. Thanks for watching, guys. See you in the next one.